Hi, good morning. Thank you for giving the opportunity. Introduction. In the context of the business report, it is essential to analyze the annual report of the company to understand the financial performance of the company and its legal compliance as imposed by the government. There are various income tax rules and regulations which is followed by the company, and that also impact the accounting rules applicable to the company. Hence, it is required to adjust both legal compliance to provide the appropriate effect. In this presentation, BlueScope Steel Company has analyzed to evaluate the effect of taxation on the books of account and disclosure of DTA and DLT in the annual report. Interpreting the financial item as disclosed in the annual report of the BSLAX. Accounting profit in the income statement. Accounting profit is the result of the business activity done in the financial year. It is on that the company can earn from the business by providing the goods and services in the market. Taxable profit in the income statement. Taxable profit is the result of business activity done in the financial year. This profit is calculated by subtracting all operating and non-operating expenses of the business which are allowed as per the income tax rule, so that the profit of the business can be determined to offer for computation of the tax. Jones 2016. Temporary difference affecting the income statement. The temporary difference is related to those income and expenditure which are disclosed in the financial statement of the company but are not supposed to allow in the income tax return while calculating the income tax to be deposited with the relevant authority. And the tax expenditure recorded in the income statement of BSLAX. All expenditure recorded debited in the profit and loss statement of the company. The tax expenditure is also part of the expenses that have incurred during the current financial year and require the same treatment as provided to any other expenditure in the income statement. BlueScope Steel Company Limited 2020. After reading the annual report of the company, it can be considered that the income tax expenses for 2019 is $292.60 million, and so the higher tax liability as compared to the last year of working. Income tax rate and accounting tax rate and the reasons for their differences. The accounting tax rate is calculated on the accounting profit, therefore it is different from the tax rate provided by ITAA 1997. Therefore, the income tax for the current financial year has been calculated on the current year's income after adjusting all deferred tax assets and liability that have occurred in the past period of company. BlueScope Steel Company 2020. The income tax rate is defined by the Australian government at 30% and also required to follow the income tax rule to calculate the tax amount to be paid by the company. BlueScope Steel Company 2020. DTA and DLT disclosure in the financial statement. Deferred tax assets and liability is a financial term that is used to book the future tax liability or assets of the company which have been generated due to compliance gap between the accounting and taxation of the company. BlueScope Steel Company has also disclosed the DTA and DTL in its financial position statement, and this is going to measure as follow. BlueScope Steel Company 2020. The reasons for recognition of tax expenses in income statement and tax payable in the balance sheet. BlueScope Steel Company has shown $292 and $270 in 2019 and 2018 of income statement of the company, while tax payable is current tax liability shown in $7.60 and $38.70 million in the balance sheet of the company. Income tax payable shows the current liability of the company which requires to be paid to government authority. Hence, it can be observed that tax expense is a revenue nature item and tax payable is a capital nature item of the company. Jones 2016. Elaborating the temporary difference between permanent difference in the financial statement. Temporary difference. This difference arises due to the difference in the tax base and the financial statement of assets and liability of the company. They also provide the need to recognize the DTA and DTL of the company if there is a future taxable income available with virtual certainty to a reversal of such difference in the future. A permanent difference. The difference arises due to the difference in the tax base and the financial statement of assets and liability of the company. They do not have any virtual certainty to reverse in the future period and provide the tax benefit to the company. Therefore, it can be said that this difference is not adjustable for the company in a financial statement through DTA and DTL. Observation: a difficulty that has been faced while analyzing the tax treatment in the financial statement. While preparing the above report, it has been very difficult to understand the treatment of the temporary difference and the permanent difference in the financial statement and income tax law. It also requires to determine the virtual certainty of the reversal of such differences so that appropriate treatment as per the law and regulation can be done. Therefore, the most difficult part is to judge how the virtual evidence can be obtained which can assure certainty of future reversal. BlueScope Steel Company 2020. In the final conclusion, DTA and DTL is a financial terms that requires the appropriate treatment in the financial statement of the company. For this purpose, knowledge of taxation is required for the account head of the company so that he can reconcile all the accounting and tax treatment which provide the impact on the income statement and balance sheet of the company. Tax expenses are the part of the tax expenses are the part of the current year and required to disclose as expenditure of the company, but it is not allowed to deduct while calculating the income tax liability. Thank you so much.